Deepak Fertilizers and Petrochemicals Corporation Limited is a big company currently worth around 18,898 crores. This company is engaged in the manufacturing of fertilizers, manufacturing of chemicals like industrial chemicals, mining chemicals, and etc. So it's involved in other different business segments. Current price is 1,497 rupees. Price to earnings ratio is 19.3. Book value, that is assets minus liabilities. The net asset value per share is 494 rupees. Return on equity is 15.6% and return on capital employed is 15.7%. So decent return on equity and return on capital employed numbers. In this segment, we're going to analyze the company's financials, that is its profit and loss, its cash flows, partially its balance sheet, and what the company actually does. So let's start. Here we have the profit and loss. Okay, you see March 2014, and on the right there is March 2025. We will go into that. We have sales, we have operating profit, OPM, operating profit margin, below the black operating profit. We have profit before tax. We have the tax percentage, finally profit after tax. Let's get into it. So pay attention to the sales and the operating profit margin, this percentage. So in 2014, we have sales of 3,905 crores, operating profit 517 crores. 2019, even though we have sales of 6,742 crores, we only have operating profit of 457 crores. The operating profit margin has fallen sharply. Let's move forward. Post-COVID, massive resurgence. We have sales of 11,301 crores in March 2023 or fiscal year 2023. Operating profit of 2,165 crores, 19% operating profit margin. And let's go to 2025. We have sales of 8,274 crore rupees after a massive decline in March 2024, and operating profit 1,925 crores, 19% operating profit margin, 1,189 crores of profit before tax, 945 crores of profit after tax. All right, let's see these numbers in percentages. What has the overall outlook looked at over a large period of time? Here it's shown 10 years. So compounded sales growth for the last 10 years has been 10%, barely 10%. Last 5 years has been 17%. Last 3 years, 10%. TTM is trailing 12 months, so 23%. We saw the surge in fiscal 2025. So yeah, 23% sales growth last 12 months. Overall, 10% is not the fastest. Of course, it is not the slowest, but still, okay, 10% is the growth rate we're looking at for the last 10 years. Profit growth is a slightly different story. We have seen a 33% compounded profit growth, which is massive. Last 5 years, it is the post-COVID resurgence. So 95% profit growth, compounded profit growth, compounded because the profit margins was sharply rebounded after the slump in 2019-ish era. Last 3 years has only been 11%, and last TTM, trailing 12 months, 82%, because not only did revenue increase over last year, we also saw profit margins actually improving, as we saw here. It improved from 15% in 2024 to 19%. So the sales are near all-time highs, the profit margins are near all-time highs, and overall, even at the lowest, 10% sales growth, 11% profit growth is decent and depends how good it is for the company's cash flows and all of that. Then return on equity, we have seen a slight improvement. 10 years ago, 13%. And as we saw after the rebound in profit margins, return on equity right now is pretty stable. 16% last 3 years, 16%, approximately 16% last year. Decent, nice return on equity. Not the best, not the worst. Then what are all these numbers? Cash flows. So we will pay attention to cash flow of this company from operating activities. You can see fluctuating 415 crores in March 2014, 796 crores in 2017, big periods of minus negative cash flow from operating activities because the working capital cycle, the working capital or the operations of the company eats all the cash away. But post that period, let's see, post that period, post 2019, all years have been positive operating cash flow. Okay, so 1,310 crores in 2019, 2022, 1,211 crores, and we see 2025, 1,880 crores. So overall, they are on the up. They are positive, largely positive, but uh, let's see how they will progress from now on because we have seen some pretty big downs and then ups. So massive cash flows are produced, but they can be a bit volatile, so they may have to be averaged out. Overall, we see they are more on the rise, but let's see how they move forward. At least it's a cash flow positive company and pretty massive cash flows for its market cap. Market cap is 1800 898 crores. So cash flows of 1880 crores, net profits of 900 crores. Maybe a discounted cash flow can work. What the company actually does. Now, one more thing, one caveat, cash flows and especially free cash flow is one of the most important statistics or measures used in evaluating companies. So just to say that. Now, what the company actually does, we have three business segments. We have industrial chemicals, we have crop nutrition business, and we have the mining business. So chemicals, I believe for the mining, but the mining business nonetheless. And it has a market leadership or leadership position or big position in all three businesses. We got 2,300 employees, we got 40 years of experience. So let's move forward. Okay. So we got the three business segments. Okay. Three business segments. Let's make myself smaller, way smaller. Nice. First, we have the mining chemicals. And what do we make in the mining chemical? We make technical ammonium nitrate. Okay, we make technical ammonium nitrate. Fine. 587 kilotons per annum, that is the capacity. This company is the only manufacturer of solid technical ammonium nitrate in India. The only. Okay, so big position, big advantage. Then what are the products? We have the products of high density, low density ammonium nitrate and AN melt. End market is mining, we've got infrastructure, we've got explosives, we've got healthcare. So this product, they're the only manufacturer of the solid form of this product. And the end markets, we have a diverse four big markets: mining, infrastructure, explosives, and healthcare. So that is what we can take from this. Only manufacturer solid version of this, so big market leadership. And second, a wide number of industries it can serve. So four big industries. And industrial chemicals. Here we have diluted nitric acid as one of its products. So DNA will be the abbreviation. 885 kilotons per annum. Concentrated nitric acid, 231 kilotons per annum of capacity. And important, isopropyl alcohol, 70 kilotons per annum. So three products under industrial chemicals. It is the largest manufacturer of nitric acid in all of Southeast Asia. It is one of the major players in the merchant isopropyl alcohol market in India. So you can search up these markets, their size, and their future outlook and growth rates. Right? So products are varieties of nitric acid. IPA is this isopropyl alcohol, methanol, LCO2, and pharmacopoeia solvents. Who's the end market? We got pharma companies, we got nitro aromatics, we got chemical derivatives industry, we got explosives. So again, pharma is a big market, very big market. So four big markets, and again, very strong position in nitric acids, a good position in the isopropyl alcohol market. Then the most important segment for the company is the crop nutrition. This is the big revenue generator. Capacity for NP. NP is nitrogen and phosphorus. Nitrogen and phosphorus. 300 kilotons per annum of this fertilizer, nitrogen phosphorus fertilizer. Then NPK, nitrogen, phosphorus, and potassium. A for potassium, 800 kilotons per annum. Then bensulf. Bensulf, you can see is bentonite sulfur, 57 kilotons per annum. Here they say they're the only manufacturer, the second line, the only manufacturer of drilled nitrogen phosphorus 24 fertilizer in India. I don't know what that means, but the only manufacturer, that sounds good. The largest manufacturer of bentonite sulfur in India. So common theme seems to be in many of its products, again, it is the biggest or one of the biggest leaders. Then we got a lot of products. Two important mentions is Smartech and CropTech. These are specialty complex fertilizers. So specialty, so this will be the more special products and I guess the more high margin products, not the bulk commodity products, but high margin products. We've got Smartech and CropTech. Then we have water soluble fertilizers and bentonite sulfur. These are the products. Again, largest manufacturer of bentonite sulfur. End market is cash crops, fruit vegetables, oils and seed crops, and water soluble segment. As a summary, a lot of products, largest manufacturer, one of the largest manufacturers in many of the products, or yeah, many of the products, and we got a wide amount of end markets, a diverse amount of end markets. So different types of customers and segments we can cater to. That's a good thing. So maybe not very dependent on one segment. Then strategic geographical footprints. Where are the manufacturing? Now, you see, under this manufacturing capacity, you will see this orange thing. See this orange, DNA and CNA, orange. This is the capacity actually being added, capacity expansion. So we'll see. Now, let me just go back. Let's just keep these numbers in mind. Okay, keep these numbers in mind. 587 kilotons per annum for PAN. Okay, for DNA and CNA. Keep these numbers in mind. Keep these numbers in the mind. Same for crop nutrition. Keep these production capacities in your mind and then look at the capacity expansion. All right, so I can't remember all this. So maybe you guys can. Okay, so then look at the capacity expansion actually happening. Where is the capacity expansion? Why can't I find the capacity expansion? Yes. Okay, so Dahej, Gujarat, they already have a DNA and a CNA capacity in Gujarat. Okay, and geographic advantage, you can read many of the customers for nitroaromatics and nitrocellulose are located in Gujarat. So there's a geographic advantage. And 300 kilo MPPA. This much capacity is actually being added for DNA and CNA, 300 and 150 respectively. Then Taloja, Maharashtra. All right, so Taloja, Maharashtra. Many of the capacities are right here. We got PAN 544, DNA, we got bensulf ammonia. Many of them are in Maharashtra. So it's located in Maharashtra, horticulture capital of India. Okay, Taloja is that. Um, caters to IPA demand of North as well as South India in Maharashtra. Okay, so this isopropyl alcohol demand can be serviced to both South and North. Okay, Maharashtra is located strategically and strategically located near the explosive manufacturers in central India. So that is the geographic advantage. Even Bensul, see Bensul 25 is produced here. So yes, then TAN of 376 kilo metric tons per annum, I believe, is added. 376. Remember the total TAN number. So massive expansion in Gopalpur, Odisha. Then we got TAN again in Srikakulam, Andhra Pradesh. And Densal, we got Panipat, Haryana. So pretty diverse number of factories and all that. Maharashtra seems to be the big one. I think followed by I think Gujarat and now Gopalpur is going to be the big one. So shout out to Gopalpur. Then market leadership in all business portfolio, the mining chemicals, the TAN, the full form of TAN, I have forgotten. Hold up, let me just search up. Technical ammonium nitrate. Technical ammonium nitrate. 41% market share, domestic market share in the overall EAN market. 25% revenue comes here. Then 59% market share in the concentrated nitric acid, 26% in DNA, 29% in merchant IPA, isopropyl alcohol market. So big numbers, big market leadership, opposition, big market position, 21% revenues. And it's a leading player in specialty and water soluble fertilizers in India. They said leading, but so maybe they could not be the biggest. Could be a big player here, providing 48% of revenues. Okay, let's move forward. Yes. What is this? Oh, yeah. I think, how did I not cover this? Okay. The transitioning from commodity to specialty. They're trying to transition from making just bulk commodity products to now making specialty products. Okay. So earlier they were just a TAN supplier, or they're trying to move from just being a TAN supplier to making explosives, cartridge-based explosives, then providing technical services and downstream operations to now, I think either they're trying to or they are now providing blasting-based services and new business models. And industrial chemicals, they were okay, so there's like selling nitric acid bulk and IPA bulk, which they're still selling, but to sell more specialized, higher margin products, okay, more specific products, they were now selling a semiconductor grade IPA, application based industry specific grades. Technical stuff, I don't know what that means, but the main thing I guess we can take away is that it's trying to become more differentiated, not just trying to sell bulk commodities, trying to sell some high margin products. Then it's crop nutrition business, the most important business. You got the plain bulk fertilizers, which it still sells, but it will started selling the smart tech we discussed, and then crop tech. So I guess the main thing we can take is that in all three segments, it is transitioning from commodity to specialty, and it's transitioning. So it's in the between process, and it's actually selling specialty products. So that's a good thing. That's a good thing. How important has it been? How successful has it been? So commodity to specialty, 45% revenue share of specialty plus crop tech, 45% revenue share. Okay. 16% revenue share in PAN from direct, I guess, consumer business. All right. So they're trying to sell more to customers, direct to customers. They're having a massive capacity expansion, and they're saying it is on track, and they just got a favorable outcome on tax litigation totaling 581 crores. You can search this up. What exactly is this? But it said it's favorable. So that must be a good thing. Yes. All right. Mining business, you got the quarter one fiscal 2026 performance. Here we can see where the sales are coming from. So we got B2C sales, B2B sales, so B2B, direct to business, so business to business sales, 111 KMT. What is KMT? Is it okay? Kilotons. I will say it's kilotons. I hope it's kilotons. It has increased to 125 kilotons right now. The biggest sales are coming from B2B in the mining business. Second largest is the B2C sales volumes. Okay, remain the same, and only 1 kilotons export sales. But under this, okay, the B2C revenue share was 16%. All right, and so see, export volumes were lower, which we saw from 5 kilotons to 1 kiloton due to export license quota constraints in quarter one fiscal 2026. Fresh export quota with increased limit to 50 kilotons per year received in June 2025. Oh my God. So earlier they were doing only 5. I hope KMT and KT is the same thing. Really do. But 5 they got now. So this is restricted. So main thing to say here for the mining business, the exports, the mining chemicals, the exports, it's actually restricted by law. So they have quotas. They need to in order to export a certain amount, they need to obtain export license quotas. All right. And it seems they have gotten an increased limit to 50 kilotons per year. and capacity utilization is a nice 100%. The quarter two is a seasonally softer quarter, and we aim to boost export volumes with the revised quota. So earlier they were doing 5. I'm assuming that means they were doing around 20 something kilotons per year. So 5 per quarter, 20 kilotons, or 15 to 20, and 50 kilotons. I'm assuming that. Do tell if I'm wrong. Do tell if I'm wrong down in the comments. But 50 kilotons, they're increasing it to. They have gotten this. So who knows? Export volumes may just have a big boost if what I'm thinking is correct. Capacity utilization being 100% is okay. That is great. Then for industrial chemicals, what is the thing that's selling? Concentrated nitric acid is the thing that is selling. 52 kilotons. Second highest we was DNA. We got DNA, 22 kilotons. IPA has seen a big rise, 14 to 18, but the biggest rise has been from CNA to SNA. Yes, capacity utilization. You can see, you can see this massive capacity utilization. IPA working at 113%. Okay, then IPA segment seems to be under a bit of stress. They have mentioned this. So IPA price continues to be under stress. The IPA segment currently seems to be under stress. Yeah, the IPA market sentiment remains weak, impacted by sharp decline in acetone prices and high inventory levels. So acetone, I guess, is a okay. I don't know chemistry. I don't know chemistry. Sharp decline in acetone could be a raw material and high inventory levels. So not enough IPA is being sold. So they are stocking up. They have to stock up more IPA because maybe they're unable to sell a lot of it. Then crop nutrition business, the most important business. What is selling? So first we can see the capacity utilization for bulk. You can see bulk manufacturing capacity utilization 70%. Okay. Let's see what's selling. So you can see bulk is these three things. We got bulk traded volumes, that is traded. I guess traded just buying and selling. ANP is ammonium nitric phosphorus, ammonium nitric phosphate, plus Smartec. Even Smartec is being counted as okay, even Smartec is being counted as bulk. And what else? Even crop specific solution crop tech is being categorized in, I guess, in the bulk segment. So they have said in the bulk segment, and the revenues have gone up like a lot. You can just see here. Revenues have gone up a lot. All right, let's just read this. Bulk fertilizers manufactured. So the bulk fertilizers actually manufactured, their sales volume showed a modest 3% year-on-year increase. Then their innovative crop-specific specialty product, CropTech, reported an exceptional growth of 73% year-on-year. In what? 73% in what exactly? Volumes? Could be volumes, could be volumes. So CropTech is this orange one. It increased from 40 kilotons to 69 kilotons. Okay, 29 kilotons of increase on a 40 kilotons like denominator, 73%. So specialty fertilizer business also did very well, 21% growth year on year. So the main thing we can take is that their implementation of specialty products, CropTech plus Solutech, bentonite sulfurics, bentonite sulfur, all of these specialty products, it's succeeding. They're still doing extremely well. And you can read the outlook. You can read the outlook. And Mahadan is their subsidiary. So if you're wondering what Mahadan is, it's a fully owned, I believe, subsidiary which does the manufacturing and all that for the, I think, crop tech and all that. These are the price movements of key raw materials. So what are the key raw materials? We got ammonia in bulk, we got phosphoric acid in bulk, and we got the potash bulk. These are the key raw materials. Prices have remained pretty stable to a kind of a lower base. Yeah, last 18 months, prices for all three. So you can see phosphoric has remained pretty stable. Even the above one has remained, ammonia has remained pretty stable. Potassium bulk has also remained pretty stable. Huh. Okay, that's a good thing. That's a good thing. Consolidated financials. Let's just see this. I think we've seen all of this. So 2024 was a dip. I don't know exactly why. Do tell down below. Fixed assets have seen an increase. The net worth of the company has seen an increase. Earnings per share overall, big dip in 2024, but did see an increase all the way to what? 74 rupees per share. Is this accounting dilution of shares? We don't know. Then massive 4,650 crores worth of capacity expansion. So 376 of kilotons per annum TAN project Gopalpur, we saw that. Post expansion, the total ammonium nitrate capacity will be 1 million metric tons per annum, making us the third largest pure play TAN producer globally. Globally, the third largest. Okay. Oh, okay. Fine. Then the nitric acid project in Dahej. This is the one. Expected commissioning, both of these are quarter four fiscal year 2026. So maybe post quarter four fiscal 2026, massive revenue growth can be expected. Okay. Post expansion, they will become the largest manufacturer in Asia of nitric acid, the largest manufacturer. All right. Overall progress is 57% for this one project, and 80% is the overall progress of the TAN project. So if this works on track, they're going to become even a more massive player, globally speaking. All right, and 65% of the concentrated nitric acid capacity is already tied up through 20 long-term year contracts. So maybe this new capacity, it's already being tied up, meaning already there's demand, there's long-term contracts been written. In balance sheet, the short-term debt, zero. As of June 2025, they said zero. Long-term debt, 3,692 crores. Cash and cash equivalents of 314 crores. Investments in mutual funds, 253 crores. Net debt. How much more is the total debt? More than cash and cash equivalents. So 3,000 crores of net debt. So debt is 3,000 crores more than cash and cash equivalents. Is this a bad thing or a good thing? Of course, debt is not the best thing, but it depends on the size of the company, depends on other things like interest coverage ratio and all that. We can take a look at that. Net debt to equity has gone down. This is a figure which has been going down, 0.43. Net debt to EBITDA. This is also a figure which is also going down. So all these numbers going down, the better, 1.5. All right, net debt increased, so net debt decreased. And all of this is despite the massive capex. All right, despite the massive capex. So that was it. Very dominant company. It seems that very strong company in many of its things that it's doing. And here, massive cash flows it can produce. At least it is a cash flow positive company. That is a good thing. And in profit and loss, we can take a look at the interest. So you see operating profit, we see interest. So divide them, operating profit divided by interest, you get the interest coverage ratio. Higher the ratio, the better. If it's less than one, it can be concerning depending on the industry and the overall trends of the interest coverage ratio. So let's see where it's looking at. Operating profit is that this one, and the third line below operating profit, the black one, is the interest. Let's go 2025. Go 2025, we see 1,925 crores operating profit compared to 413 crores of interest, giving it a interest coverage ratio of more than 4, which is, I think, pretty healthy. It's a pretty healthy one. The interest has risen sharply in the last few years, but it was going down. So pretty confusing. Um, in 2020, it was around 2 interest coverage ratio. In 2023, it was more than 10. In 24, it was around 3 point something. Increased to 4. 3 to 4 is pretty healthy. Okay, so that was it. Any other company you want to analyze, you want to have analyzed, do tell down below. Buzurg.